on the agenda is the approval of minutes from September the 3rd, 2025. Do I have a motion?
Approved.
A second?
Second.
All in favor?
Aye.
All right, then the next item is going to be the adoption of the agenda. Do I have a motion?
So move. Second.
All in favor?
Aye.
Excellent. So we'll move into our first action item 2A, the 2017-2022 capital program phase 4 sales tax capital maintenance budget reallocation. I'll call on Mr. Barowie to take that.
Thank you, ma'am. Mr. Hamer is not able to be with us today. So this agenda item is to reallocate capital maintenance funding to do a design for the renovation of CC Blaney. It has been a closed elementary school. There's an interest to create a middle school for Baptist Hill. That school has already stood up on the campus of Baptist Hill High School. And so this funding would be to design the renovations necessary to put a school back in that building. It includes most of the building systems that are in the school right now, and that's how we've got it broken down.
All right, I'll open it up for discussion. I'll lead off, if that's okay with the committee. Mr. Barowie, it seems that this item has come up before us before, or has at least been discussed before, maybe in emails. Can you refresh my memory?
So it has not come to the board before or Audit and Finance, but it has been discussed in various forums. The community has brought it up at a number of meetings, wanting to create a standalone middle school. And so the superintendent is committed to pursuing that option. Obviously, once we get the design complete, we'd still have to come back to the board for construction funds as well.
So as correct me if I'm wrong, in the discussion, wasn't there a fiscal impact?
So the fiscal impact is design and construction. This is the design funds. The construction funds would be a fiscal impact. Hopefully we can manage that within the resources if necessary, but we first have to complete the design.
Right. Well, I guess maybe I'm not clear as what you're saying, but it was my understanding in the emails that there wasn't a desire on the part of the district to do it because the enrollment numbers didn't support
the enrollment. Yeah, the typical, I'll say that the traditional decision by the board, which goes back to 2000, has been we don't build a new school for less than 500 students. This is renovating an existing facility, which we've done in multiple locations around the district over the last quarter century.
Okay. That's not my recollection to the emails, but okay. Does anybody else have anything? All right, does somebody want to make a motion? All in favor?
Aye.
Any opposed?
Excuse me, Madam Chair, I did not hear what the motion was that we're voting on.
It's the motion to approve the reallocation of funds as shown on the attached resolution.
Okay. I have a yes vote.
I'm sorry, was that a yes?
Yes, yes.
All right, then we'll move on to items 2B, Series 2025 Tax Anticipation Note Resolution. Mr. Prentice?
Yes, good morning. So every year we have the prospective need to issue a tax anticipation note to provide cash flows until the majority of our property tax revenues come in January. So this resolution would authorize up to a $60 million tax anticipation note, which of course would be paid off just as soon as those revenues come in to help us bridge that gap. Last year we did a smaller tax anticipation note. We had the same $60 million authorization and really worked closely with the county treasurer's office to make sure that the timing of their wires to the school district aligned with our cash flow needs, particularly in the month of December. And we didn't end up needing it. So if we can administer that same process this year, I think we'll be okay. But we definitely want to be prepared. And so this resolution is critical to giving us the ability to issue that tax anticipation note quickly if the need arises, if circumstances were to change, because we just don't have a significant variance of cash flow in the November, December months of the year to be able to react faster than that. So we're asking for authorization or recommendation of approval of this resolution by the Board of Trustees. And we would issue that tax anticipation note if needed later this fall. And I would advise the committee if that action occurred.
Okay, sorry, I had a window pop up on my screen. I'll open it up for discussion. Does anybody have anything, Mr. Garrett?
Question with our current reserves, that those are not enough to, I know the cost of this is minimal, but they're not enough to cover the expected.
It's right on the line, and it really comes down to timing
Okay.
with the transfer of funds. So if the treasurer, for example, until the week of Christmas to provide that transfer,
But it's-
we would probably need to issue the TAN if they can get it to us the end of the first week, second week of December, based on our payroll cycle. It's really that first payroll in December where we start to flip negative. We run about $22 million every 2 weeks in payroll. And so that's, kind of the critical variable.
Okay.
So we wanted to have the authorization, but we would only issue what we needed when we started to iron out, as we get our November payments from the county, we would start to iron out exactly what we thought we would need, if any. And last year we sized down. It was my first year. I wanted to make sure we absolutely, were covered. And then we ended up being right on the line and we wouldn't have needed it. So to your point, yeah, I think the interest on it's like $100,000. It's not a significant amount in the grand scheme of things, but if we can avoid issuing it, we will.
Okay.
Anybody else? Mr.
Mr. Daniels, did you say that you were trying, so I get this for cash flow purposes, but and you're hoping in the near future that you wouldn't even need to do this? This is just a safeguard for this year for
So if
timing.
correct. If our analysis lines up to what we saw last year and we can count on the treasurer's office for that payment, early December, then we would proceed not to issue. I think based on where our fund balance has gotten and what our cash flow picture looks like, we'll be okay. But we just wanted to have the authorization. And, if we get to that point this year and we're good, next year, we, perhaps would just bypass not doing a resolution, or might wait an extra month if we saw something change.
Great, thank you.
Anybody else? Miss Stamp?
No questions, thank you.
All right, do I have a motion?
Move to approve.
All in favor?
Aye.
Any opposed? Okay, the motion carries. We'll go on to item 2C. Series 2025 General Obligation Bond Resolution, originator Mr. Prentice.
Yes, so this is our annual fall general obligation bond. Important here, this is a short-term general obligation bond, so it matures within a year. This serves three purposes. First is to provide for the payment on outstanding installment purchase revenue bond principal and interest, and then to provide for cash flow on our fixed cost of ownership program. And in this case, also to provide some one-time funding for land acquisition. This essentially is a bridge between, the ability to utilize the debt sinking fund and the timing of the collection of property taxes in the sinking fund. So we would issue this and then pay it off as property tax revenues are received. But the way the state law works, you can't expend cash directly out of your sinking fund to projects directly. It has to be coordinated with the issuance of debt, so principal and interest payments. What's good about this, a little bit different from prior years, we used to issue a bond anticipation note in the spring for fixed cost of ownership, pay that off with the general obligation bond in the fall, and then pay that off with the revenues that come in the spring. And this year we were able to bridge that cash flow on the fixed cost of ownership where we didn't have to do the bond anticipation note. So this GO would provide the cash flow for fixed cost of ownership, and then we would pay it off. So it skips a step and saves on interest. And so that's just based on our evaluation of our cash flow needs and looking at all of the balances that we have across operating and capital. So this is different in the sense that we have not issued that spring bond anticipation note and therefore no interest was paid. on such a transaction. So this would be the only step needed to provide that continuation funding.
I'll open it up for discussion. Mr. Garrett.
I had a question, which with the $9 million purchase of land is included in this?
Yes, sir.
Which elementary schools is it relieving or,
It's relieving Springfield and Drayton Hall.
oh, okay,
This would be where Long Savannah will be developed.
okay.
Does anybody else have anything? Mr. Prentice, would it be appropriate to touch on a little bit of what we discussed yesterday on the phone about this, about the possibility of opening or exploring the legalities of opening up the opportunity to the general public?
Yeah, so our bond counsel is on. Carol, can you hear?
Yes, sorry about that. I'm here.
Could you phrase that question for Ms. Clark? I want her to speak to the background there, and we also have our financial advisor on.
So the context of the conversation that Mr. Prentice and I had yesterday was when issuing these bonds for investors to open up like some lower priced bonds for the general public to be able to invest into the school district. And Mr. Prentice was concerned about the legality of allowing that or that being a possibility.
Well, with general obligation bonds, which these are, state law requires that they be publicly sold. And so we have a stated time of the sale of the bonds where we open it up for bids. And typically it's, the larger banks who come in and bid on them. So that really under state law is a problem because it's not like we can just say, okay, we're selling bonds at such and such interest rate for anybody who wants to come and buy them. It is a public bid process.
Okay. Thank you, ma'am.
Okay.
Does anybody else have anything? All right, we'll bring it up for a vote. All in favor?
Aye.
Should say, does somebody want to make the motion?
Second.
And then all in favor, Ms. Stamp?
Aye.
Aye.
Any opposed? All right, and that, we do have one more action item.
Yes, two more.
That is, sorry, I've gotten, my screen is off. The series 2020 CEE FC tender resolution, Mr. Prentice.
Yes. So we have a unique opportunity to consider here. I think most of you know that the district Charleston Educational Excellence Financing Corporation, which was established many decades ago for the purpose of issuing installment purchase revenue bonds to build school facilities prior to the enactment of the Education Capital Improvement Sales Tax. There's a series of bonds from 2020 which refinanced a prior transaction, and that transaction was done as a taxable issuance at a lower interest rate when essentially you could refinance the bonds before their call date and achieve some savings given the interest rate environment at that point in time. You remember back in 2020, rates were historically low. And so it was done as a taxable deal. Now we're kind of in another circumstance where we are seeing the trading levels of the bonds and the current interest rate environment where we could potentially enact a bond tender where bondholders could sell their debt back to the district at a price above the trading level. And then we could issue tax exempt bonds and essentially generate savings over the remaining maturities. So it would require a certain level of bondholder participation. So there's no guarantee that you would see, full absorption of that. But Wells Fargo has done some analysis for us. And they're seeing kind of a market average of maybe 30% or greater investor interest. And so that would generate anywhere between $1 to $4 million in savings between now and the final maturity in 2032. So we need an authorization through resolution to engage this transaction. But if we saw that the interest was low and therefore the savings weren't worthwhile, we wouldn't have to proceed. But we wanted to consider this just given the current state of the market, the way that transaction was handled back in 2020 is taxable, and the notion that we could potentially achieve additional greater savings between now and the date of maturity.
All right, I'll open it up for discussion.
It's another tool in the toolbox.
Ms. Stamp, do you have anything?
No, I don't.
All right, with that, do I have a motion?
So moved.
Second.
All in favor?
Aye.
Aye.
Any opposed? All right, we'll move on to item E, 2E, Head Start Program Procedures Update. Ms. Foxworth.
Yep. So Ms. Foxworth is going to come to the podium and present some of this information. The committee may recall from several months ago, we had a review conducted by the Head Start agency, and there were several findings that needed to be identified or addressed, excuse me, that were identified in that audit. And so to clear the corrective action plan, these procedures need to be essentially approved by the board. And because it's related to a grant, and because one of the procedures is fiscal in nature, we wanted to bring it through the Audit and Finance Committee before it goes to Committee of the Whole on the 13th of this month. So I'll turn it over to Ms. Foxworth.
Sure. I don't have much more to say other than we have been working diligently. We have 120 days to make these corrections on these last 6 areas of noncompliance, which we do have to turn into the Office of Head Start on October 14th. And so we did need time to review our program procedures. So what you have in front of you are 4 program procedures in the areas that are areas of noncompliance we're related to. One was deficiency related to safety, but actually under HR, but how Head Start has organized its safety. And then the other 2 were program governance, which we've been working on with training, program sharing. And then the other 2 were fiscal. And the 2 fiscal wasn't that we were mismanaging the funds, it was really procedural. One of them was we were not capturing inventory as frequently as they want, so we did some changes in our inventory collection procedures. And the other one was how we didn't have written procedures for how we do drawdowns. So nothing was around mismanagement of funds. It was just making sure our procedures were in line. So the 4 that you see there are related to actually explicitly outlining those. And so the 2 that probably you're most interested in are the 2 related to fiscal, the drawdown procedures and our inventory.
Thank you, Ms. Foxworth. I'll open it up for discussion.
I'm assuming you've had some conversations and with the and some input that these procedures as outlined would satisfy those findings.
Yes, we've already done the way Office of Head Start works, they kind of do an initial check-in to see how you're doing. They also assign us TNTA, training and technical assistance. And so actually we were supposed to meet today, we'll see, with our TNTA to kind of finalize our plans, but we have been receiving feedback all along the way.
And we also embedded a resource from finance in the office to help craft this. So it was done in partnership between finance and their office as well.
Yes, that's been, Ms. Hayes been a huge help to help, especially from somebody from the outside to kind of look in and make sure we're capturing everything.
Ms. Stamp, do you have anything?
No. It's pretty detailed. Thank you.
Yes, ma'am. And does anyone else have anything? Thank you, Ms. Fox.
All right, thank you.
And then do we have a motion?
Move to approve.
Second.
All in favor?
Aye.
Any opposed? All right, with that concludes our action items, and we'll move on to items 3A, our information items. Monthly capital projects report, August 2025. Ms. Costello.
Good morning, Committee Chair Watley and committee members. I'd like to present the August Capital Projects Report. Our revenue collections for the month were $788,000 above the cash flow model projection, which is based on the most recent collections with 2% growth over the prior year. The expenditures for the programs are as follows. The 2010 through 16 program, $19,000. The 2017 through 2022 program, $3.4 million. The 2023 through 2028 capital building program, $15.1 million. The 2023 through 2028 capital building program, $4.6 million, and that is the long-term debt program funded with the long-term debt. The fixed cost of ownership 24 program is in its final stages of financial closeout. The fixed cost of ownership fiscal year 25 is in the final stages of completion. And the fixed cost of ownership fiscal year 26 program was approved and is running through June 2026. I'm happy to answer any questions you may have.
Thank you, Ms. Costello. I'll open it up for questions. Nobody?
One
Mr.
question,
Garrett.
with the long-term debt and the additions to it, is there, are there, with the next building program, are they planning to use long-term debt? I know you can't, you're planning 6, 7 years in advance, but is there a plan to try to prohibit or eliminate the need for long-term debt, or like, can it all be done within the sales tax program, or?
So,
I was going to say, my estimation is the answer to that will be no.
Okay.
I think there will be, I think there will be more projects than projected revenue. Similar to the last cycle when we had more projects than projected revenue, and that's when we went to the long-term debt to close the gap between funded and unfunded. So I mean, right now we have $400 million worth of projects on the unfunded list.
Got
And
it.
the overall take on this building program is close to $1 billion. And our goal all along was to increase capital maintenance. So you've seen the switch from phase 4, phase 5 to maintenance, from construction to maintenance to cover those buildings that we built 20 years ago.
Okay.
yeah, I would agree. And I think the big difference, though, is that right now we have those truly long-term installment purchase revenue bonds outstanding. And then our more recent long-term debt issues have been 10 years or less. And so once the installment purchase revenue bonds are paid off in 2032, you'll be able to more rapidly amortize any long-term issues. I mean, long-term by definition would be anything greater than a year. So, you might be able to look at a mix of 5 and 10-year issues paid by the ad valorem levy, property tax, but we would be able to reduce our millage rate because right now you're paying for, that GO resolution included $50 million in principal and interest payments for installment purchase revenue bonds. And when that chunk goes away, what we need for recurring long-term debt for ongoing projects will be a much shorter window, and we'll be able to save substantially on principal and interest, of course, by doing it over a shorter time as well.
And that,
I'm sorry, Mr. Garrett, go ahead.
just that chunk will go away 2030?
2032.
Okay.
Yeah.
So I go back to the Baptist Hill situation. How is this going to loop into that? Unfortunately, not everybody is privy to those emails and the discussion fiscally that surrounded the enrollment numbers and splitting that school to renovate.
So the board would approve any issuance of debt for projects. Of course, the Phase 6 referendum would have projects listed on it, and anything in the Phase 6 referendum would be covered by the sales tax proceeds. So it would really be the will of the board working with staff to issue debt for specific projects. Like the recent issue that we did was for Cochrane, Midland Park land acquisition. What were the other two on there?
We had Midland Park, AC Cochrane, Morningside.
Morningside, yep.
Although I did have a thought after our conversation about it the other day, because we're dealing with the same type of thing in the West Ashley area. I foresee that there's a lot of development that's happening over in West Ashley that's bleeding out into the Ravenel area. So it might be prudent to go ahead and get ahead of the growth.
So there's some structure and strategy with this. We levy 23 mills of property tax on the debt side now. Each mill is worth close to $6 million in revenue since it's collected on both 4% and 6% assessed value properties. So when that installment purchase revenue bond chunk goes away, that $50 million or so that, is dedicated this year, we'll have an opportunity to look at, potentially reducing that levy, but also, you could potentially build a 50 or $60 million school, with a 2-year GO bond or something like that. I mean, the notion of long-term debt for CCSD will really be project specific when a need arises to do something outside of the scope of the sales tax. And that would really be, as the churn of the 7-year authorization of the sales tax happens, if it wasn't something that you could slide into the next authorization, depending on where you were. Sometimes there's a situation where you say, well, there's things that we might need to do now that aren't authorized in phase 5, but we wouldn't go issue a separate bond right now to do it because we can put it in phase 6. And by the time that gets authorized, then we have revenues coming in to support it. So it's a very fluid thing. And it's just, the, we would have the lowest profile of long-term debt per capita of any K-12 system in the state, based on the value of the sales tax that we collect. And again, it would just really be something comes up and there's a critical need that we need to address outside of the capacity of the sales tax. As Mr. Bro indicated, there's just a lot, since we pay for a lot of capital maintenance and everything on there when we calculate what we need to allocate towards that program versus what we need to allocate towards new construction.
Ms. Stamp, do you have anything?
No.
Anybody else? Mr. Wooster? No? Okay. We'll move on to the item. Thank you, Ms. Costello. We'll move on to the next item, 3B, monthly financial report, August 2025. Mr. Prentice.
All right, so we have several documents on here. First is the general operating fund report for the month of August. Nothing really significant to note here at this point. Small stream of revenue coming through from local sources, predominantly interest and some property tax payments from vehicles. State revenues, local revenues, everything appears to be in line with our assumptions for the budget. We reviewed our final assessments from the county over the last couple of weeks, and we were right on target with our assumptions for revenues in the budget this year. So we expect that everything will track very closely as it did in FY25. Same thing on the expenditure side, nothing particular to note. Of course, these reports get a little bit more robust as we get further into the year. We've got the WSF report on here. We've shared this report in its new form. We've added some additional enhancements to it now, showing encumbrances in the graphs. So there's kind of 3 different colors baked into the charts that show the amount expended, the amount encumbered, and what the balance is. So we're right on, the $30 million of $36 million encumbered of the total amount authorized for WSF for FY26, and almost every dollar of funds allocated have been or approved have been allocated to a strategy. So nothing of concern there. There are some variances that you see on the report as a result of encumbrances, and that's not anything to be concerned about. We adjust encumbrances for payroll monthly, and so sometimes we run one payroll, and it shows up as an actual expenditure, and then the encumbrance is still for the full amount, and that end of the month we reduce it to the amount remaining for the year. So sometimes it shows a little bit of a variance, but no, there's no concerns with budget to actuals and the WSF plans. One thing that the board approved this year as part of the budget, there was a resolution with the adoption of the budget, and it requires that we present any uncured over budget amounts to the board on a monthly basis after they haven't been resolved for 60 days. And so we have that report included in here now. There's only a handful of accounts, and I don't want to call anybody out. There's no concern here, really. They're just things that we're working through administratively, but it gives, transparently an idea of where we have budget issues that we're working to amend and address through transfers. I will say that 3 of the lines on here are substitutes, and we're currently working on a plan to kind of revitalize or redevelop our SOPs for substitutes. The way they're handled with long-term subs for FMLA cases versus regular leave utilization versus professional development requires a very fine-tuned approach to how we look at this monthly. So some of those variances with substitutes are a matter of expenditures posting to the wrong account and budgets needing to be moved between the accounts. So I will raise a flag if there's a concern with something that is out of hand in the future if it needs to be raised, but nothing of concern here. But we're sharing that for the resolution. And then the last report on here is the Head Start report. This is just the monthly requirement now in compliance with the Office of Head Start regulations as part of the items that Ms. Foxworth talked about earlier.
I'll open it up for discussion if anybody has anything. Ms. Stamp?
Uh, how did this shut down? How will that impact the Head Start program since they're on a reimbursement basis? How will you be able to cover their expenses for any period of time without them being able to draw down funds?
So we claim quarterly. And so we have, the cash flow in place to be able to cover that. We're of course watching that very closely in terms of today being day one of government shutdown as a result of the budget not being approved. But assuming the federal government needs to get back on their feet within the next quarter, we would deal with that if we needed to. But I don't anticipate that we would be behind the eight ball on our quarterly reimbursement claim. So we've got the capacity to handle that over the 3-month period.
Okay, thank you.
Does anybody else have anything? All right, we'll move on to items 3C, purchases and contracts greater than 250,000. Mr. Prentice.
Yes. So we have the dashboard back on the website for the month of September. So you can go to the transparency page under financial services to review that information. I'll just slide through the detail here. The majority of these over the course of the last month are existing contracts and state contracts that were previously in place through renewals and things of that nature. There were 6 competitive bids that were issued throughout the process of the month. I'm sorry, there were 8 competitive bids that were issued through the process of the month. And those are listed accordingly on the report, predominantly in the area of construction and capital maintenance.
Any discussion? Ms. Stamp, do you have anything?
No, thank you.
All right. We'll move on to items 4A to convene an executive session. Do I have a motion? All in favor?
Aye.
What would be easier to ask the visitors to leave or us go back?
I think they're settled down.
We'll just, everybody can stay put. We're gonna go back here.
Yours is 97?
96.
Nice, okay. Say one, there's 97.
We have a motion to resume back in open session.
So moved.
All in favor?
Aye.
All right, coming out of executive session, we have, let me make sure I'm in the right place. Mr. Prentice, would you, or Mr. Baroi, would you like to propose the executive session content and we'll take a motion.
So our proposed motions for your consideration would be to approve the real estate agreement, real estate purchase not to exceed the appraised value, and listing a property on MLS and enter a negotiation of a real estate contract per staff recommendation.
Who would like to make the motion?
Move to approve.
Second.
All in favor?
Aye.
Aye.
Any opposed? And that does conclude, that concludes our meeting for today. Thank you, everybody, for being here. Upcoming meetings are November the 5th, 2025. And with that, do I have a motion to adjourn?
So moved.